Let's get to the trader rundown now with Joe Tigay of Equity Armor Investments. Joe, I think a lot of people are anxious about the ongoing debt ceiling debate. Are you seeing fear, though, in the stock market?
Yeah, well, everyone's talking about the angst and the anxiety and the concern about that. If you look at the VIX, it's telling a different story. Nobody is concerned about this event. In fact, the VIX is at 17.75, and that's like, that's levels we saw in 2021. So that's a very low level for the VIX. In the post-COVID era, this is about as low as it gets for volatility. And now there's two sides to that coin. The obvious sign that most people the bulls would like to think about is that, volatility is low, things are safe, we can get back in and invest in our stocks and everything is fine. The contrarian side, which I tend to lean towards into, is that when volatility is low, people aren't worried about the potential risks. And then when there's a trip up, the market can go down a lot faster. Remember, I told you this was the lowest it's been since 2021. Well, at the end of 2021, which is when it was this low, the market was getting ready for a 20+% drop. So are we getting ready for another drop? That's anybody's guess. Volatility can still stay low for extended periods of time, but I am certainly concerned, and I think it's worthwhile to put some protection on, given the potential risks we know that are out there.
Joe, do you think traders are paying close attention as to what's going on with the job market?
Yeah, that's another thing I'm watching closely now. The unemployment rate has stayed tremendously low. The jobs seemingly have been strong this year, on and on. Another thing that I'm watching, though, is the initial claims. So these are people filing for unemployment benefits. These are starting to rise now. This is the highest level we've seen since October of 21. So this is a leading indicator in job losses, I guess. Usually this is about 2 months ahead. Now, it's possible that this might come back down and we can avoid a recession, but historically and typically that doesn't happen, and you usually see job losses come after this. And this is just kind of the start of job losses materializing. And when job losses materialize, that's bad for stocks. That's usually when you see volatility going higher too.
Thank you so much, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.